So good morning students, welcome back to my channel. Okay, so today I am going to discuss the next illustration under hire purchase system from B.B.Dambook. Okay, so annuity table you have heard. Annuity means what? Okay, a regular payment. Okay, a regular cash payment. Okay, at intervals. So here annuity table will be given to you and you may be asked to calculate the cash price from the annuity table, or you may be asked to calculate the installment value from the annuity table. Okay, so there are sums on annuity table. Okay, you see illustration number 11 from B.B.Dambook. From B.B.Dambook under GU. So GU means Guwahati University. Okay. So you see this is the question, okay, and the sum, okay, I have solved. Okay, so you just try to clear out, okay, what is the solution of this question. You see, Mr. A. Gogoi purchased an air conditioner on installment system from Chaudhary and Company on 1/1/2018. So the asset was purchased on 1st of January 2018. The cash down price for the air conditioner was ₹20,000. So this is the ₹20,000 is the cash price of the asset. Okay, cash price. The price was to be paid on ₹6,384 down. Okay, so what is the amount of down payment? ₹6,384. Okay, and the balance in 3 equal annual installments commencing from 31st/12/2018 at 5% interest per annum. So there will be 3 equal annual installments. The value of each installment will be same. Okay, and the balancing figure, okay, will be paid for 3 years. Okay, or within 3 years. Okay, what is the date of starting? 31st/12/2018, because the asset was purchased on 1st of January 2018. Okay, so the commencing date of the payment of installment will be 31st/12/2018. Okay, interest is given 5% per annum. Here the next slide it is said ₹1 can buy an annuity of ₹0.367215 at 5% for 3 years. Okay, so ₹1. Okay, ₹1 is the present value. So what do you mean by present value? It is the cash price. Okay, present value means it is the cash price. So here ₹1 is the cash price. Can buy an annuity. Annuity means what? It is a payment, okay, at regular intervals. So here payment at regular intervals is what? Installments. Yes or no? So what is the installment value given for ₹1? It is 0.367215. Okay, at 5% interest for 3 years. Okay, so ₹1 is the present value, okay, or the cash price. Calculate the amount of interest charged each year. So you have to calculate the amount of interest. Okay, so you can prepare that chart. Okay, illustration number 1, remember I have done, okay, how to calculate the amount of interest. Okay, so this is the chart. Okay, but here you see cash price is given. This is the cash price, ₹20,000. Okay, then you see down payment amount is given 6,384. Okay, interest is charged at the rate 5% per annum. But where is the value of installment? The value of installment is not given. in the question. Yes or no? It is said that installments are equal. Okay, and there are 3 installments. So you have to calculate the value of each installment. Okay, so that can be done, okay, by using this annuity table. Okay, that rupees 1 can buy an annuity of rupees 0.367215 at 5% interest for 3 years. Okay, so just you see the calculation of installment value. So cash price is how much? 20,000. Less down payment, it is 6,384. So what is the balance? 13616. Okay. Now it is said that rupee 1. Okay, rupee 1. Okay, which is the present value. Present value means what? The cash price. The cash price. Okay, when it is rupee 1, annual installment is how much? Okay, annual installment means the annuity. Okay, the annuity amount. How much? 0.367215. So when the present value, that is the cash price, this is the balancing cash price. Okay, balancing figure of cash price. Okay, this amount 13616. So when this is the cash price, okay, what will be the value of installment? Okay, that you have to take out. So it's very simple. When 1 is the case, this is the amount of installment. When 13616 is the present value of cash price, what will be the value of installment? Okay, so X, that is installment value, goes to this multiplied by this. Okay, this multiplied by this. Okay, so this you know. Okay, so you have to multiply. Rupees 5,000 is the answer. So that is approximate figure. Okay, actually the answer is 4.99999 ... Okay, so if we have taken it as rupees 5,000. Okay. So 5,000 is the value of 1 installment. Okay, and you see here it is clearly mentioned that there are 3 installments of equal amounts. So if the value of 1 installment is rupees 5,000, then the value of other 2 installments will also be the same, that is 5,000. Okay, so you have to calculate the amount of interest. So you have to put this one, make these columns: amount, interest and capital value, cash price less down payment and interest for the first year, that is till 31st/12/2018. Okay, first year, that is 31st/12/2018. So on this 5%, so this will be the answer, 681. Interest, amount of interest. Now less first installment, which is 5,000, to get this figure, then again add interest. Okay, so on this 5%, so 465 is the second year's interest. Okay, so you get this figure, less second installment, you have to deduct. Okay, then third year's interest will be the balancing figure, as I have taught you. Okay, so what is the third installment? It is 5,000. So 5,000 you have to write 5,000 minus this amount, 4762. You will get the balancing figure of interest, that is 238. 238 is the amount of interest for the third year. Okay, so this interest amounts you have to put 681, 465, and 238. Okay, and 238. Okay, so you have to total up. You will get the total interest as 1384. Okay, 1384. So So now you take out the capital value. Okay, this is the amount of down payment 6384. Then you see from the first installment, that is 5,000, you deduct the amount of interest, you will get this figure 4319. Then again from the second installment, that is 5,000, you deduct the amount of interest, you get 4535 as the capital value. Then again from the third installment, that is 5,000, okay, you deduct the amount of interest, you will get 4762. So capital value means what? The cash price of the asset. Okay, so you add up all this down payment plus, okay, these figures, you will get 20,000, which is the cash price of the asset, that is 20,000. Okay, so this chart, okay, this statement is prepared only to take out the amount of interest charged in each year, okay, which is asked in the question. What is the amount of interest charged each year? Okay, so this is how annuity, okay, with annuity table, the problems are solved under higher purchase system. And this topic is important. Okay, you have to know it. Sums come on this topic during exams. Okay, so I have explained you very nicely. You please try to see the sum, okay, and try to do it by yourself. Okay, practice it at your home. It will be clear to you. Okay, so thank you for today, and if you like my videos, please subscribe to my channel and press the bell icon, okay, for latest updates. Thank you for today.